Hey guys, so today we'll be talking about how to read the market directions using oakcliff.com. You guys can check out the link to the Discord in the descriptions and use the tools at www.oakcliff.com for free. You guys check out this site. So let me introduce myself first. My name is Freddy and I've been an investor for 11 years. I spent a lot of those times guessing, chasing stocks, getting beat up. So when I started to learn about options, something clicked. I realized this is where the institutional guys play. They use options to build huge positions without moving the stock price. So that's where the idea comes from. I start tracking volumes, strikes, and flows, which is the change of the volumes. And my friends started using it, and oakcliff.com was born. So let's start the tutorial with a crash course on options. So the big guys use contracts to buy and sell stocks because number of stocks are very limited. Imagine this. Remember when Warren Buffett bought Apple for 36 bills? Imagine this, if he show up in the stock market with that kind of firepower, Apple will climb up in record time, making his average price goes up, and he'll be liable for market manipulations. So instead, he used warrants, which is almost equivalent in options in general. So again, almost, that is a very generalization term, but for simplicity's sake, we use warrants is almost equivalent, okay? So options is technically a contract between investors. So let's say investor A has 100 shares of Apple and he bought it at $100 a share for simplicity, okay? Investor A wanted to sell and he's wondering how to generate incomes from it, okay? So enters investor B who wants to buy Apple, but he's kind of, uh, doubtful that Apple is gonna climb in his favor, okay? So in order to do this, investor B going to make a contract to investor A and pays a certain fee, and this fee is called as premium, to investor A and says, hey, if Apple reach 110 in 3 months, investor B has the rights to take the stocks from investor A. So in this scenario, investor B is buying a call because he's bullish on the stock. And investor A pocketed the premium as a fee. And he's getting income. And if Apple climbed to 110, he'll pocket the profit from the shares and the premium. Okay? So these contracts are automated in the brokerage system. And for puts, let's say we have an earnings coming up on Apple. We can gauge normally Apple can fluctuate more than 10% during earning. That's just say every stocks are different. So the big players who has millions of shares has to secure their positions, okay? That's where buying puts come in. In layman term, buying puts is like buying insurance, okay? Let's say if Apple drops more than 10%, right? The other investor has the obligations to purchase the stocks at the agreed strike price. All right, here's the example. Let's say Apple is trading $100 a share before earnings. Investor A, who is known to has Apple, right, bought a put for $95. Okay. Now, after earnings, Apple dropped more than $95. Let's say 70 or 80, I don't know. Investor A sells Apple for $95. Does not matter if it dropped to like 70, 60, 50, whatever. Investor A covered the losses at $95. So these are the basics, right? It has option has so many multiple strategies to use as income generators and insurance policy. So one of the most famous options trade are Mark Cuban's with his Yahoo stocks during the dot-com burst. So he protected his wealth by doing protective collar options on Yahoo. So he he put an insurance policy on his Yahoo stock, and after that, Yahoo crashed during the dot-com burst. So in Oak Cliff, we track volumes and open interest of these trades of certain stock. So the idea is we can gauge the liquidity of the stocks by tracking these numbers, okay? So in general term, volume is basically how many contracts are traded during that day. And open interest is how many contracts are still open overnight. Of course, in oakcliff.com, we still have a caveat, okay? I know it's a bit contradicting, all right? But just keep this in mind. You don't really have to worry that much, okay? Calls are generally positive and puts generally are negative, okay? But far out of the money calls can be speculative. Far out of the money puts can be signs of climbs. All right. Here's the example, okay? Out of the money calls, let's say Apple, which is trading at $100 now, and then you see Apple calls are being bought at 150. It's a speculative bet or an income strategy. So you guys have to keep this in mind. I'll show you in the example later. Or in puts, if you see Apple are being put at out of the money, let's say 150. Sometimes investor may be protecting their position in that number, or they're actually selling calls, which is, you guys remember in the example before, investor A is actually selling calls to generate incomes. So you guys have to remember this as a caveat of Oak Cliff, okay? But don't put too much pressure on you guys on this problem yet. So we'll see it in examples. All right, so we'll do a demo time, okay? Let's see, how do we escape? Okay. All right, first of all, you guys can go to oakcliff.com over here. You guys can join the Discord here. Here's the button to go to the Discord. And let's say we're gonna track NVIDIA, okay? Oops, sorry. Hang on. Oops. All right. You guys gonna put in a ticker over here, NVIDIA. And you guys can put in days until expirations. I normally do 30 days. But for this example, we'll do 90 days, okay? Right. On this panel on the top over here, yeah, you guys will be able to see what kind of sentiment in general the stock is having right now. Let's say if you guys can see over here, estimated downside protections for puts, which is puts practically, we are looking about $260 million worth of puts are being traded right now. And estimated upside bets, which is calls, in general, we are looking at $380 million, okay? So these are notional values. So this is an estimate of how much value of options are being traded right now. And in here, we can see the idea how much the calls are clustering at. So they are expecting the options calling at 116 over here. And the puts are at 116 as well, okay? This is a general idea where the option is gonna be, okay? And in here, we can see the expiry notional. So basically the idea of how much are being traded now. We are looking at the 16th of May, we are looking about 100 mil, and the puts is about at 44 mil. So basically the calls in short-term periods, we are facing a bullish pressure going up, okay? So if the puts are bigger, normally the stock price will go down. Normally. All right, so another panel that majority you guys will be using is these panels over here. So basically, these panels, this table will show you on the expirations of May 16, pretty much a week from now, you guys will be able to see, okay, at the strikes of 120, NVIDIA is, we are looking about 144, let me see that is about 148,000 volumes of NVIDIA being traded. And it has zero open interest, which is pretty much a very good sign that NVIDIA is gonna climb up during this week, okay? And NVIDIA is also being traded at 127. Remember the caveat that I told you? These are pretty much a speculative trade. If you guys can see at the longer term, you guys will be able to see NVIDIA is being traded at 130. Okay, this is very speculative. This is why I put in the caveat in the presentation before. And in the puts, we're looking at 165. That is very far out of the money. So it may be speculative, you know, it doesn't really matter for now, but you guys have to keep this in mind, okay? And next table that you guys have to worry about is actually this chart, okay? In here, we can see the notional value. Remember, notional value is basically how much money put into the options trade, okay? If you guys can see in here, we see about 115 notional value, pretty much about 61 million US dollar being traded at 115. So basically, this is a call wall. Basically, the idea is this call wall will support the price. So these guys are trading at 115. So the pressure of the price will go up more than 115. And you guys are gonna see this call wall as well at 120. So this is how I can kinda tell, hey, NVIDIA is gonna climb up to 115 next within a couple of weeks, you know. That's where I can see how the stock price gonna climb up, okay? And basically that's the idea how the stock price are being measured in here, okay? All right, so for sanity check, we'll do something that is kind of bearish right now that I'm looking at. We are looking at Freeport McMoran company. Basically, it's a mining copper mining company in United States. We'll see. The price has been going down for a year now for Freeport, and I'll show you the chart on Freeport how the pressure is going down. Okay. All right. Remember when I told you guys that you guys can see the demands? Like if you guys can see, okay, the puts is about 12 millions and the calls is about 3 million. Okay. Next week we are looking about $466,000 in calls, and the puts are about 695. All right. And if you guys can see in this table, so we are looking about $40 calls. We have a push up about 1,600 calls volume. Okay. And the puts, we are looking at $38, and we are looking at 2,500 something volumes. Okay, so basically it's a bit almost double the size of puts. So in theory, Freeport is going down. Okay, and you guys can also see in the notional value table here, you will see about $55 strike. We are looking at a put wall with a value of 10 million there. Oh wow, that's a pretty huge number, you know. So yeah, basically that's how we measure stocks in oakcliff.com. So hopefully you guys can use the oakcliff.com to measure the stocks. All right, so enjoy and happy whale hunting, you guys.